Hi trader, my name is Chris. This video is brought to you by Admiral Markets. I'm going to take a look at the US dollar bullish recovery of last week in these particular currency pairs. But first of all, be aware that this video is intended for a global audience but may not be suitable for everyone. To get more information on that and conditions, admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. That's how you can find out more. Also, be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only, and by continuing watching this video, you agree with this disclaimer, and you are aware of the risk involved when trading. Alright, let's take a look at the euro dollar. There was a lot of action last week, and this week could be a very heated week as well because, first of all, today, the 31st of August, is the last day of the month. And there could be some retracements to close out profit for the month-end closure. Next month, of course, starts tomorrow. There will be a brand new monthly candle available for us to review tomorrow. There's going to be an Aussie interest rate on Tuesday and a Euro interest rate decision on Thursday. There's going to be interesting USD numbers on Wednesday, ADP, and Friday, NFP. All of those things, of course, will provide information what the interest rate is going to have in September, or perhaps probably not, and maybe later this year. From a technical point of view, I see a major wick here. Look at that, plus a bearish candle right at that 38.2 fib. Has been my analysis for a while, this midterm analysis, that this is going to retrace up to perhaps the 38.2 fib. If it didn't break 108, it didn't. Moved up right to the fib. 117 was a turning spot and moved down. So is that a reversal, or is that just a retracement from more upside? Now, from my point of view, definitely the interest rate is going to have a big impact on that answer, or that question, in fact. So if the interest rate does get hiked, I would expect to see a follow to the downside. If it doesn't, perhaps price will stay in this range environment that we've seen for the last few months, and we could stay maybe in this range from 108 up to perhaps 121. And just go sideways. 121, from this point of view, is the max retracement I would expect. I wouldn't expect it to go higher than the 50 fib in the long-term perspective before moving down still for that wave 5 here from Elliott wave perspective to the minus 272 target. Whether that downside is going to happen in September, October, or perhaps next year, I think that really depends on the interest rate. If we have a bearish September, I would still be patient and expect, or at least be patient with October. If it's not a bearish September, then I'm changing to neutral, and I would expect some sideways movement for the next few months. Now, let me zoom into the 4-hour chart, and you can see the price stopped at the 38.2 fib and the 61.8 and the 70.6 fib recently. That could be a bouncing spot, just of course because of the fact that the weekly candle was very bearish. Doesn't mean there couldn't be a retracement of that weekly candle. The price is retracing back to the support. If you look at the 4-hour chart, we had 3 good up moves here. Here, probably cannot see that well. Let me take this beautiful mini terminal away. And you can see here, upside, upside, upside. So a lot of uptrend. But of course, this downside very strong. So we are bouncing off the 78.6 fib here of that latest upside. That could easily be a bouncing spot to retest this top. I don't expect that top to be broken. I don't think that last week's high will be broken. But there could be a bullish rebound here. So if price breaks through this resistance, or if it hooks back and shows weakness, I think that could be an interesting long that I'm looking for to test this top. And I would take profit probably around that 115 area, because that could be a resistance spot for more downside. So despite the big bullish candle, I'm at this moment slightly more bullish at the right spots, though. This is not the right spot either here or upon the breakout. Could become again bearish as price gets closer to the resistance, because then I would expect a bit more downside. If last week's low does get broken, that could also indicate some potential for downside to retest the 108 bottom. Well, I'll certainly be keeping an eye on the euro dollar throughout the week. I'll do that on Tuesday and Wednesday, the live trading room looking at Fibonacci and waves, and Wednesday looking at strategy. Nanette has his opinion on Monday, taking a look at the recap. Wednesday on price action trading, and together Thursday we take a look at bounce and breakout. So take a look at these webinars if you have time. Also, make sure to take a look at our content that Admiral Markets is releasing on a daily basis. Taking a look at the pound USD weekly candle at this moment, and you can see that weekly candle really a very strong bearish engulfing twin breaking below this support level right now. So from that point of view, certainly bearish, maybe even more bearish than the euro dollar, because this is an engulfing twin. So still one major key. All right, you can see it on the monthly here. That key low of July. So that's an important level, obviously, and also a weekly support level. So if that level breaks, I do expect a retest of the bottom, and we can see that space right there down to test that bottom. We also have a 150 level, perhaps to be careful of. About here, probably it's 151 actually, and a 150. Those are of course also levels to be aware of. But if it does break below this 153.25, I do expect a bit more bearish continuation to retest those supports. Otherwise, looking at for a bounce right now, you can see that the daily candle had a doji that could also indicate a bounce, just like the euro dollar. But how far will it bounce? That's the question. Considering the momentum to the downside, I could expect price to turn at the 50 to 61.8 to 78.6 for more downside. So the same pattern could happen here as the euro dollar. A bit of a recovery bounce, head into resistance, and then turn back down, and perhaps break the bottom and make those spaces down here to continue with that trend to the downside. So it's an interesting time here on the pound dollar. Will it indeed break the bottom? Will it go through and continue this downtrend? Certainly looking at last week's candle, that seems likely at the moment. So keeping an eye on these retracement resistance fibs and also on the breakout potential. All right, let's take a look at the dollar yen here too. A big wick indicating the dollar strength just on all these pairs, like the euro dollar, pound dollar, same thing. And we see a pretty bullish wick here. Now, personally, I'm not a big fan of trading the dollar yen at this moment. It's just pretty much consolidating, pretty much correcting, and I think that if it does bounce a bit here, it could still run into resistance. Actually, from that point of view, it could be interesting to look for a bounce trade to the downside if it does retest the top. Of course, if it does break through resistance, then we're getting into bullish territory. Wouldn't jump in along immediately, but eventually on lower time frames would be looking to capitalize on a continuation to the upside. Don't think that will happen this week, although you never know, but primarily looking perhaps for a bounce to the downside there. Otherwise, it could retest the bottom wick here. Price could retest it, and that could be a bouncing spot too. I think basically price could be range bound for this week. Not that interested in the dollar yen at the moment. Now, if I look at the AUD/USD, that looks a bit better. We see a continuation of the downside, strength of the dollar here. A bit of an Aussie bounce, a bit of a wick at the bottom, in fact, a bit different than perhaps the pound and euro, but still downtrend continuation. So ultimately, I think that if it retraces these highs, this week's high, the week before high, that still could be ultimately a good resistance zone for more downside as the AUD/USD downtrend can continue. That always remains potential there as it hooks back to this resistance zone. There's a lot of clutter there. That could become resistance as price retraces for those interested in looking for that potential bounce. And we'll keep an eye on perhaps the 4-hour chart, looking for some good candlestick patterns at this zone for a turnaround. Now, obviously, if it doesn't get there, there's always the chance of a breakout as well. Something like this trend line could indicate that it is a triangle at the moment right here. So if price does break through the bottom and pushes this triangle, breaks this triangle, in fact, to the downside, that could still be a breakout. That's interesting for further downside on this AUD/USD. Hope to see you in the webinar, and thanks for joining our video today. Make sure to take a look at Admiral Markets in the social media, and wish you all very good trading. Cheers.